Well, I think they have more space because they deserve that valuation, because look at the impressive same-store sales both of those companies have been putting up the last several quarters.
What are they doing right? And take them one at a time. What is Walmart doing right? What is the Rubik's Cube that they have solved? And there were a lot of people 5-8 years ago who thought, boy, Walmart is sucking some wind here. And then the same question for Target. What's Target doing right?
Well, so Walmart dramatically improved their execution, especially in grocery, and then particularly online, and they really went after the omni-channel strategy. So using grocery pickup and more recently grocery delivery to increase their digital customers who also become better store customers, and then they've been able to leverage that into their general merchandise category as well. So they're one of the retailers that's driving positive traffic same-store sales in what's a more challenging environment for many other retailers.
And how about Target?
And then for Target, for Target, similarly significant changes to their assortment over the last couple of years under Brian Cornell. That's allowed them to go after the apparel business in a big way. We estimate they've added over $1 billion of apparel sales over the last 24 months. They've gone after the toy business with the closure of Toys R Us, and they've done a great job executing their omni-channel as well with a significant buy online pickup strategy.
How should we think about the tariffs, the December 15th tariffs, Robbie, if they do go into effect? I mean, theoretically, the holiday season won't be impacted because much of the merchandise has already been brought in or is sitting in some warehouse someplace already. But going forward, I would imagine the goods they do bring in will be hit by tariffs. Are they just going to absorb the costs, and so we'll see it in the margins in the next quarter? How do you think about that?
You know, it's a great question. And, you know, I was just in Asia Pacific last month visiting with manufacturing partners of people like Target and Walmart. One of the advantages that both those retailers has is they're very large. They've got scale, so they're very well positioned to mitigate the tariffs with support from their partners over in China.
So let's talk a little bit about your overall view of consumers. Do you see any hesitance on their part to spend, any kind of retracement in their optimism or not?
Well, we had a report out this morning on our discount store demand indicator, and it looks at a lot of macro factors for consumers. And one of the things it continues to show from one of the inputs, which is Bank of America credit and debit card data, is that the lowest income cohort continues to grow their spending at a much faster pace than all the upper and middle income cohorts. And that bodes really well for Target and Walmart. So we haven't seen any slowdown in momentum. You're still seeing things like strong new home sales. The labor participation rate continues to improve. This is all good news for the core Walmart customer and also to a certain extent the Target customer.